Hi, this is Kelly Wright at the Money Show in Philadelphia, and today I'm joined by my friend Mr. Bryan Perry, the Cash Machine.
All right.
Hey, you've forgotten more about fixed income than most people know.
It's been a long time. I mean, it goes back to Bear Stearns, 1989, I guess, when I first started trading junk bonds, when Michael Milliken was the only game in town, and there was only high yield, really corporate junk to trade.
So let's talk about the fixed income market.
Yeah.
Gee, you got negative rates over in Europe.
Correct.
People say that negative rates are coming here. I haven't seen them yet. I hope not. But anyway.
Right.
But what's working in the fixed income market right now?
Well, quite a lot is actually, because we're kind of the oasis now for yield around the world, and that's in the AAA market, but also in the high yield market. You look for what are primarily domestic plays, because that's people are fearful about everything outside our borders, but the U.S. is pretty much, self-sufficient in a lot of ways, in a lot of industries. So corporations that are small to medium cap, companies putting out debt are doing quite well.
Okay.
And when you look at the high yield market, Kelly, you look for indicators, because those markets tend to lead the stock market.
Right. The bond market's always been smarter.
So when you see the corporate, the cracks in the junk market start to hit, you'll see the big ETFs like HYG and JNK. Those will start to go over, just like they did. Back in 2008, they led the way down. Even in 2016, at the first quarter, that was a very soft time. You saw, and then last December, in the fourth quarter last year, they also in late November they kind of gave a sell signal, and the market came in. But what we're seeing here is, despite the fact that we've seen this big rally in bonds, you're also seeing HYG and JNK shares push to 52-week highs right now. Okay,
so then that kind of speaks to the strength of the economy.
It really does. There's an underlying strength and a level of confidence that belies the fact that we're not going into a recession anytime sooner. I personally don't think we are, based on all the data points that keep coming across.
You know what? I'm with you. I don't think we are either. Are we late cycle?
Quite possibly. But we didn't have this kind of central banking intervention for the last 100 years either. So you've got this extension of things going on. Right.
Very unique, very unusual time. So,
and in that regard, you got a number of places where businesses, the labor markets are tight, small businesses are doing well, money's cheap to borrow. And so you've got things like business development companies doing quite well. They're especially the ones that are maintaining a lot of exposure to those various service industries that are doing quite well for the consumer.
Those are pretty good. Those are pretty high yields relative to the rest of the market, right? Business development.
Yeah.
So, is that you've got conservative investors who want conservative income, and then you've got investors on the other end of the curve who don't mind taking a little risk.
That's correct.
Where does BDCs line up?
I have one is called Triple Point Venture, and they do a lot of early and mezzanine financing for a lot of high tech companies on Silicon Valley, life sciences, things like that. It's been a barn burner though. It's been a really great stock. They've been in a lot of good IPOs that have worked, and it's a nice incubator for people to say, well, I'll never get the next to Facebook or Slack or whatever may be coming out, Airbnb and all that, but they've got positions in all these, they're early investors, so it's a nice way to kind of play that. And it pays around a 9 yield, 8.7 yield, 8.9 yield.
Wow.
Another one is, for instance, New Tech Business Services. So they actually have a TV campaign now, but they're the largest SBA lender outside of the SBA. When they do private SBA lending, so they offer everything from payroll services to supplies to human resources, all kinds of things, staffing and whatnot, in addition to loaning money. So it's kind of a one-stop shop for a lot of small businesses. It pays around an 8.7 yield, very nice yield, so right in there. But again, these stocks are also moving north, very nice appreciation. So you get nice total returns. And but on the low end, I run 3 portfolios: a safe haven, conservative, and aggressive.
Okay, that's
yeah. On the safe haven side, Kelly, I'm still, it's added AT&T. Elliott and Elliott Management just got in. Paul Singer just took a big position.
He's kind of an activist. Well, he's not kind of. He is an activist investor.
They're still getting 5 and change on the dividend. And they're an early, early 5G opportunity there. They're actually ahead of Verizon in that area. Dividend Energy is breaking out. I got that's looking very good, and they're a big export of LNG. They started their Coal Point LNG terminal last year. I own PPL, which is a little bit of a laggard on price appreciation, but still is paying 5 and change. So
that has both domestic and UK.
Yeah, big UK.
Okay,
Yeah.
right,
So
right,
if
right.
Europe turns or whatever, then it's kind of it's a call option on Europe at some point in time there.
Okay.
But no one's going to turn the power out, in the UK. I don't think. Not I've heard.
Yeah, if they did, we'd have bigger problems than that. That's true. That's true.
Yeah.
All right.
And,
hey,
yeah.
This is Mr. Income, Bryan Perry of the Cash Machine. I'm Kelly Wright at the Money Show. Thanks for joining us.